Hello everyone, good afternoon. All right, real quick, can I make sure you guys can see the S&P chart and the audio is good? All right, awesome, all good. All right, thank you, Michael. Thank you, Joe. Christopher, thank you. Yes, all good. All right, awesome. All right, guys, so let's go ahead and get into it. As you guys can see, the market is moving. So without any delay, I may cover the morning session setup briefly after we wrap up here for the afternoon session. But I'm going to be expecting quite a bit of movement here. So we see that displacement here on the 1 minute candle right after 1 o'clock. So we have one of the Fed members jawboning right now. So they're talking, and then obviously they're repricing the market using that as the smokescreen. So what I was interested to see here, let's pull up the 5-minute chart. So we got the displacement I was looking for. So again, I'm just going right into it, assuming you guys watch what we were looking for on Sunday, which is we're going up to go down. So again, I'll cover that briefly after the session, but again, as I said right now, we got some action, so going to get right into it. So in summary, we traded higher into this daily fair value gap, which is the red rectangle. Traded just short of midpoint or consequent encroachment, and then we broke down, which is exactly what I'd want to see if we're bearish. So now my sights are on these equal lows in here. So if we look at our 15-minute chart, we can see these equal lows here. That's what has my attention for this PM session. Also a fractal market maker sell model here with the original consolidation. So just putting that out there, what I'm expecting and what I'm looking for as a result. Again, before I go any further into the analysis, I do want to let you guys know that none of this is financial advice. This is just my opinion. Read the CFTC disclaimer before you do anything else. And again, this is just education and my opinion. You do need to take full responsibility and accountability for what you are doing in your own financial decisions. So with that out of the way, again, looking for a market maker sell model, the original consolidation here, equal lows. So that's what has my attention for this afternoon session. So I was interested in seeing after we broke down, I was checking my phone actually as I was leaving the gym, and then I saw we got a nice breakdown. So what I'm going to want to see is, or measure, is if the market has a willingness to pull into this down candle here, into this fair value gap. And then how we trade there will be significant. But I do like, again, how we traded up to a premium, broke down aggressively, and then I would be looking at this as a 2022 model short. But again, waiting for time to get into alignment. It's not even 1:30 yet, so I'm not in here impulsively pushing buttons in a hurry to get into something. You got to wait for time to get in alignment with price. So I'm going to wait for 1:30, see how we trade there, and then I may even wait till the silver bullet time window at 2 o'clock. But again, given everything we have going on in the world, Fed members speaking, geopolitical things, you do want to keep in mind the elevated risk that we're in. So let me go ahead and check out the 1 minute chart. And it looks like we're consolidating there for a minute, just waiting for the 1:30 hour. So let me go and check the chat. Joe, hello, good day. Obakeng, hello. Missed the AM session entry. Yeah, I'm seeing quite a lot of people were not able to get on that bus ride higher. So for those of you guys that were in the Telegram, you guys did see us calling the market higher, but it was pretty much a straight shot. Unless you were aggressive in getting entries on the 1 minute, it more than likely went without you. But that's part of trading. You're not going to be in every move, and that's something you have to accept going into the business. Hello, Anita. Awesome. All good. Thank you. Ronnie, thank you. Carl, hello. Remnant Capital Trader, all good. Denisha, hope you're well. Thanks for joining us. Reason for ES and Q for short, they'd both be appropriate. Personally, I prefer trading ES. Olawale, hello. Cheers, Dylan. Thanks for the live stream. Awesome. Thanks for joining us. VPN. Jay, the 5 minute breaker would act as resistance. Just wondering if it will even go to the 5 minute fair value gap above. I see what you're saying. In here, the breaker, mitigation block, whatever you want to call it, right there could keep price at bay. Definitely. That's what it is I'm watching. But again, because we just got into that 1:30 window, I'm not in a big hurry. And then again, as you guys know, I'm a 1 minute trader, but I'm not just looking at the 1 minute chart. So here, pulling up the 15 minute. Again, we see that aggressive breakdown through this fair value gap. No market structure shift on the 15 minute chart. But once you know what you're looking at, once you know how to probe order flow, you don't need a shift in market structure. Trading through this fair value gap and closing below it, that's a market structure shift for me. I don't need to see a swing low taken out because I already know what I'm looking for. And again, I'll teach you guys more how to do that later on, but that's not something that's salient right now. The important thing is that we were calling this market higher to a premium. Why? Because the market's not just going to go straight down. It has to deliver to a premium first. So we traded long, my team, my associates here, we went long this morning into the levels that we had called out. And then while we're waiting, looking at the hourly chart here, let's go ahead and make this full screen. So again, you guys know we were looking for the buy side here, and here. So I shared those targets to you guys yesterday, and then we smashed them today. And then also we had that red rectangle, which is that daily fair value gap, repriced into that beautifully. So all our upside targets hit. But again, I'm not bullish on this market longer term. I was short-term bullish into a premium because again, we don't just drop and keep dropping. It has to go up into a premium. And then remember, I told you guys to look at the market like a market maker. If eventually you're going to reprice it lower below these equal lows and send it to the floor, you're going to want to accumulate the stops here and here, take those traders out, take their bus seat, get on to go short. So that's how I'm looking at this price action here. And then even further refining this, I'll go ahead and throw this one in here, no extra charge. So we opened here. Again, I was looking for that red rectangle to be a draw, but why specifically, what specific levels was I looking for? This liquidity void in here. So where we dropped and there's no trading, that was one of my targets this morning. And you guys see we hit the low end of that perfectly. And then that met my objectives for the morning session. So that's what I was looking at here, this AM. All right, so let's go ahead and get into the business for the afternoon session. All right, so breaking down. So again, we are bearish. And again, the market does not need to trade into this inefficiency. I would have preferred it do so and then give a nice breakdown on the 1 minute for an entry. But it doesn't look like it's going to give that. So now that we're into the 1:30 window, I'm going to want to see how we're trading and then potentially look to get an entry to go short. And again, for compliance purposes and for the disclaimer, everything I am doing is in demo. You can't make money. in demo to pay taxes on, and you also can't lose money in a demo account. So again, we're just talking about candlesticks, no financial advice here. Moon Traveler, hello, hello. Was that dump because of the news? No, news doesn't. News is pretty much the smokescreen that they use to move the market. So the market was already gonna go up to go down as we were expecting since Sunday. The news, the Fed member speaking, that's just a smokescreen to justify why the markets are moving. We don't pay attention to that stuff. We're here looking at the technicals because the charts are going to tell us everything we need to know. The press conferences, reading those reports, trying to get fundamental analysis from that to make financial decisions on, that's an extremely tough game to play. And it's not necessary in my opinion. For me, the charts tell me everything I need to know, and I don't need to try to mess around and see what the Fed's saying and all that. That in my opinion is just noise. Yeah, did you take any trades today? Yes. Yeah, my team and I, we were all over the longs from this morning. We were buying into these premium levels. Nabil, give it time to 130 to start the manipulation phase. Yeah, definitely. You got to wait for time to get in alignment with price. None of this is promising or has me wanting to jump all over it because we can still trade up above these highs, which is what I'm preferring to see. So again, that's why we're not jumping the gun, looking to get in, chase, let the market unfold what it's going to do. And I'm still subscribing to the fact that we're going lower overall, but we still could want to poke above these highs, which is what I'm looking for. So we traded down to consequent encroachment of this wick here. So just short of 50%, did not get below that. So my attention goes to the buy side here. Just want to look for a short-term run above these highs. Guys, we're 84 on the chat. Give a like button so the algos boost his YouTube see. Appreciate that, Christian. Yeah, if you guys hit the like button, comment, helps us out here greatly. How do you decide between trading NQ and ES? It depends on market structure, a lot of things overall. Like for example, the past few weeks we've been discussing how S&P's been the relative weakness leader and why I was favoring shorts in that over the NASDAQ. But so longer term, I look for obviously what's the strength leader or the laggard, and then I'll obviously prioritize that, or just the market structure itself. I can just look at the market structure and it'll tell me which one's going to deliver the most cleanly. So those are the things I'm considering when determining whether I want to trade the S&P or the NASDAQ. Can you show what your entry was on the AM session? That already happened. That's not making me any money. We're focused on the PM session now. So again, I said I may take a look at the morning session after we finish up, but again, I'm locked in. I'm not looking at at the morning session right now. We're in the afternoon. Are you live daily? No, I'm not. I come on whenever I meet my goals and I'm happy with what I'm doing. I'll come out here and hang out with you guys if there's still things in the market I like, but not something I schedule every week ahead of time. Anonymous Trader, glad to be a follower when your lives was 25 views and now over 100. Wonderful. This is just the beginning for you, Dylan. Appreciate that, Anonymous Trader. Appreciate the support. It means a lot. Janice, love the detailed commentary. Thank you. GMX, are you profitable? Working on it. Do you trade the PM session most of the Mondays? Monday depends on a lot of things. That's a detailed question. Christopher, thanks for your time, mate. Awesome. Thank you. Can you explain the conviction for continuation? Yeah, we were bullish into the daily fair value gap. I covered why we were looking at on Sunday. So again, that's why I said, if you guys aren't locked in on Sunday, taking notes, sharing narrative, because everything I am sharing is narrative. We're going up to go down. And I said it in very plain, simple terms. And again, if you're not there locked in, taking notes, then you're missing out. You're missing out for sure. And then the rally escaped you. And then while we're dropping, that also escaped you if you're not locked in. So definitely got to take advantage of what it is I'm providing. Richard Williams, I get you commenting all the time by asking me to take some live trades. Brother, I'm not running a signal service through YouTube. Raptor, do you play stop loss based on your execution time frame? Yeah, I do. Typically 1 minute is how I'm using my stop loss, but I invalidate something I'm looking for on a 5 minute chart. Again, the 1 minute isn't enough to invalidate something. I can get stopped out, and if everything's still good to go on a 15 or a 5 minute chart, I'm right back in there on a 1 minute entry. So again, just recapping what we're looking for. So we're in a bit of a consolidation. So what I'm going to want to see is if we're going to go lower, again, I prefer us to see take out these highs. I don't like to see smooth highs like that and then drop. That would be more suspect to me. So I'd rather see them take it above these highs, again, clear out these stops, take it up into this inefficiency, and then break it down and sell off for the rest of the PM session. That's personally what it is I'm favoring. Jess, great job. Love your streams. Thank you very much. Anon VPN, Dylan is the real deal. Been watching since early 2023. Take all the wisdom. Thanks, man. I appreciate it. Ronnie, live stream on Sunday was epic. Gave me my bias. Now waiting for the shorts. Right on, my man. Right on. Which days do you avoid trading? There's an extensive protocol I have that constitutes a no trade or a trading day. Some of the simple ones are Mondays. I prefer not to trade, but if I see something obvious in the charts that I like, my models are there, market structure is clean, I'm probably not going to pass that up. Days before non-farm payroll, I tend to not want to trade. So again, it's an extensive list of what constitutes a trading day or non-trading day. That's just something you'll pick up from me over time. I'm just spending time here with it. Olawale, SMT with NQ on the 1 minute. Yeah, I do see NQ's actually delivering higher quite nicely. I'm watching that on my other monitor. So I do see NQ here sweep these highs. But I do want to see S&P poke above here. I want to see him clear these stops. I wouldn't want to see him reprice it lower without at least taking out these traders here first. Where do you recommend someone new to start ICT? 2022 model, hands down. And then from there, I would go into 2023 mentorship and core content. If you're starting now, I'd go right into 2023 mentorship just because he's live. And again, this is how you learn the skill set. Learning in hindsight, looking at things after the fact, that has a place in your learning and your development. But where the rubber meets the road is when you're actually live in front of somebody that knows what they're talking about and that can explain it. And since ICT's given his time out, I would definitely take advantage of that opportunity. Raptor, how will someone enroll for mentorship? Well, again, we'll have all those details out on the website, which will be out here pretty soon. Val, what is your model? Several, numerous models. CPI on that list, yeah. So I don't trade before CPI, like before the actual news. But after the news, the CPI hits the wires. I usually wait 30 minutes to an hour, and then I'll go into the 9:30 opening, and I can trade the CPI day. I don't think it's a bad day. Do I think it's a day beginner should trade? Probably not. And that's actually something else I wanted to cover, actually, while we're just consolidating in here, is that, again, I'm asked all the time, what's a non-trading day? What's a day you're looking to trade? And then I'll share that. But when I'm saying it's not a higher probability day, I don't think it's going to be the highest probability day. I'm just being responsible here with my influence. I understand that a lot of people are looking at what I'm sharing and hanging their hat on the words I'm saying. So to be responsible with that influence, I'm sharing the lower probability days that would be problematic for newer traders. If you're a seasoned trader, if you're consistently profitable, if you know what you're doing, obviously you're not going to be listening to that advice because, again, you know what you're doing. But that's just me being more responsible with my influence for newer traders that still aren't profitable, that are still finding their way. So when I say non-trading days, that doesn't mean necessarily for myself. That's me applying it to newer, less experienced traders. So again, smoking these highs here beautifully. So again, I'm going to want to see how we trade above these highs now. So again, that's why we're not here impulsively chasing the short here. So this is when your models don't work. Fair value gap, trying to short. Why are you shorting here? It's not time to short yet. We haven't even hit 130. So again, understanding time, that's how you're going to prevent unnecessary stop outs. Raptor, love you, bro. Thank you. Thank you. All right, so we're trading into that 5-minute fair value gap in here now. So I'm going to want to watch and monitor how we trade into there now. And then again, I pulled up the 15-minute chart, but again, I don't look at it very often because it's a snooze fest. It's really slow. So here we broke down 15-minute fair value gap, and now we're poking into that. So I'm going to want to monitor how we trade here inside this premium inefficiency. So now we're dropping down into our 1-minute chart. Let's go ahead and get down into it. But again, referring all the time frames. So constantly looking at the 5-minute, 15-minute chart. So I'm going to want to see how we trade into here. I prefer to not see us get up to the high end. I prefer to see some of that inefficiency left open, because then that would qualify it as a breakaway gap and indicate to me that this market's really weak. And then that'll allow me to trust the sell side here delivering lower where it is I'm expecting. And if we just completely deliver all the way through this inefficiency and I'm incorrect, that's fine. I'll just have to realign myself with what price is doing. So even if we get it wrong, it's no big deal. I think we're likely to have an upside continuation for the PM session. Awesome, awesome. There needs to be a bull and a bear each side, each day. There needs to be a buyer and a seller. So. Yes, after the news release, it's very nice. GMX, when I was saying 130, I was referring to the timing element. So 130 is the start of the afternoon session. Dylan, how long did it take for you to become consistently profitable? So I was in the financial markets for about 4 years. And then, again, as I told you guys before, I floundered in all the lies, all the misconceptions, obviously, that are promoted all throughout the industry, with support and resistance, retail ideas. So again, like many of you guys started out, I did as well, floundering in these concepts. The lies we're told that the financial markets deliver under. And I was there for about a year, figuring things out, finding my way. And then I finally figured out that obviously this isn't working. And there's a lot more going on here in these markets. Was introduced to ICT through another educator and never looked back. And then once I found ICT, 6 months of just locked in, dedicated studying, I was able to get to a point of consistently profitable. And then 6 months after that to a year after that, after finding profitability, I continued studying and then just became a beast. All right, so we traded above these highs. I'm going to want to see a breakdown in here, or it may want to poke above this high. So again, not in any hurry to do anything. It's still very early in the afternoon session, so not looking to get in prematurely. Jaffish, hey Dylan, We provide monthly sub to mentor or yearly. Any idea of cost? Very interested. Yeah. So again, we'll have all those details out. Appreciate you expressing your interest. We'll have all those details out on the website. It'll be a monthly subscription to remain enrolled, and it'll go for the full year, 6 months to 12 months. Ryan Hoops, I'm convinced he's ICT's secret adopted son. So the reason I'm not selling short yet, because order flow is still short-term bullish. Looking at the 1 minute chart, down close candle still supporting price. Remember, I took our attention to the consequent encroachment of this wick. We see how we didn't trade down to it. That's indicating that the market's bullish. So gonna allow it to see if it wants to poke above this high, and then see how we trade there. Mustafa, we will make a new high. Please be careful with shorts. Smith, do you trade with Top Step? I do. I am funded through Top Step. I've received payouts through Top Step. Top-notch company. They are definitely one of the better choices in the prop firm space, and I definitely support them. And I even have an affiliate link that if you want to sign up through them, you can do so through our discount code. Joe, do you take volume into consideration as we trade into that gap? That's a good question. No, I do not. I do not look at volume. All I'm looking at is time and price. Time and price. Anything else like level 2 data, all that stuff can be spoofed and manipulated. And then as you guys see, if you guys read the news, JP Morgan, Goldman Sachs, they're constantly getting fined for spoofing, which spoofing is putting in orders, making it look like there's a lot of buying or selling interest at a specific level. And then when the market actually trades there, they pull those orders, manipulating retail traders into thinking, oh, the market's going to go there. So there's a lot of rigging that goes on in the level 2 data, volume's central in futures, but the level 2 data, stuff like that can all be spoofed. So that's personally why I don't look at that. Open, high, low, and close, and what time is it? That's the only thing that can't lie. You're A-booked on Top Step? I would hope so for Top Step's sake. They better have me A-booked. What is the 4406 level you have marked? I'm not sure. 4406. Yeah, I don't see a 4406. I'm not sure what you're talking about. Jonathan Velasquez, Mustafa, don't bet against Dylan. Fund Up, are there specific times when manipulation occurs throughout the day like you mentioned earlier? Exactly. All these manipulations are occurring at very specific times. So for example, when the morning session today was bullish at 9:30, what do we see? We open at 9:30, manipulation. So all this run lower, lower, lower once more, that's manipulation. When's it occurring? At specific times we're looking for it. And then now looking at the afternoon session here, if we are going to be bearish, just like at 9:30, at 1:30, what do I want to see? Some type of manipulation just to get the retail traders off sides, because they'll chase that rally thinking it's going to keep going higher. Whereas we're looking at it to trade into the inefficiency to reject and go lower. But again, nothing in here constitutes any type of trade or anything that has my interest. Murphy's, do you have a video on one shot, one kill model? I do not. I did not make a video on that. But I think ICT has quite a bit on his YouTube for short-term trading. Yeah, I'll go ahead and share with you guys what I did for the morning session. I'm getting a lot of questions about what I did for my AM session entry, so I'll go ahead and cover that for you guys. So what I want to see here is displacement. So if we're going to go lower, the market needs to displace. Right on cue. That's exactly what I'd want to see right there. So now that'll allow me to trust that we're going lower. So again, we traded into the 5-minute fair value gap, into the 15-minute fair value gap, and broke down, not filling it in all the way, which is what I'd want to see. So this would be something that I would potentially look to take a short on. Let me see if I can open up my demo account. Paper trading. HS, the way you read price action is sick. So much value. Thanks, man. Awesome, my man. Glad you're finding the value in it. So dollars pressing higher, which is what I'd want to see if we're gonna go lower. But again, I'm gonna wait to see how this candle closes. There's still 15 seconds left, and I'd want to see it leave an inefficiency and then reprice away from that inefficiency. The only reason I'm reluctant to get in a hurry to go short is because there's still equal highs here. So I'd prefer to see them roast these highs and then reprice it lower. So that's why I'm not in a hurry to chase it lower. So monitoring how we're trading inside this fair value gap. Again, nothing I like as a short entry, just because we still have these equal highs here. So that's a big thing. No confirmation, no trade. If I was just in here chasing this fair value gap short, I would have got stopped out. If I was chasing this fair value gap short again here, it would stop me out. So that's why you need confirmation when you're trading. How do you know to look for confirmation? Well, you have to know what you're looking at. You have to understand how to read price action. So in my earlier days, this would have been a stop out here and here for me. Just looking to trade patterns for pattern's sake, not understanding timing elements, narrative, and how all those things come together. I'd just be chasing the market lower short here, looking to go lower, or right here, as soon as we traded into that, I would be looking to go short. And I would just impulsively look to get in there because thinking the market's running away from me. And then I would FOMO into the market. Sound familiar? Probably does. This is how you fix that. You have to understand how to read price action first and understand that there's equal highs here. We traded lower, but then we pulled right back into the range. So that's not a displacement. So that's why this isn't a short. And that's how I just would have saved myself a stop out right there. So it's also understanding how to filter setups. That's key. And again, that's why, especially when I'm training, working with clients, it's always emphasis on we're not here trading patterns. We're trading liquidity and narrative. So if you're just in here looking for patterns, looking for, 2022 pattern, it's not going to be effective. You have to understand first how to read price action top down, and then that's when your patterns become effective. All right, so we got about 2 minutes till we get into the 2 o'clock hour. So I will be right back. Gonna go use the restroom real quick. Oh, was the sound off? Oh man. All right. Yep, I'm getting a call on Discord. That's what it is. Mute. Okay. Can you guys hear me now? Apologize for that. All good. So much lost knowledge we'll never know. All right, I'll go ahead and cover it again. I think I was on mute. Apologize. I think I had my microphone turned off. Man, it's so much shit to this. I gotta have the OBS microphone on. I gotta make sure my actual microphone's on. All right, so back to the 4-hour chart. What I was explaining here was how my associate had the sell side anchored to the bodies. Why? Because that's where the liquidity is. It resides in the bodies. That's where the volume is. So just trading below the bodies, what's that? That's the rejection block. So that's enough to upset that liquidity below that. And that's why we're pulling back into the range now. So what I want to see, if we're going to look for lower prices in the stock market, I would want to see dollar continue rallying. That's what I was covering. So no secret lost knowledge. Let's put that back on. All right. So again, we covered here why we weren't in a hurry to look for shorts. Why? Because there's still these smooth highs here. So I'm going to expect the algorithm to want to reprice into those. Retta, you're waiting for the 2 o'clock p.m. silver bullet. That's why you didn't enter. I'm waiting for us to leave this range, so I can take trades before the silver bullet. Like if the market structure there and is there and the setup presents itself ahead of 2 o'clock for the afternoon silver bullet, or even before 10 o'clock for the morning session silver bullet, I can take a trade before then. But if market structure looks like this, that's what keeps me from wanting to take a trade. Look at the 5-minute here. The market structure is atrocious. That's nothing that has me interested in wanting to risk capital. So that's why I'm saying I'd want us to leave this range. We'd have to take out these highs or just break down lower. That's what I'm waiting for. I don't like to enter in consolidations because it can chop you up, smack you around a little bit, and make you wish you never turned the computer on. So, so just watching this here again, waiting for us to break out. Not break out because I'm a breakout trader, but we're in time distortion right now. Well, how do you know when we're done with time distortion? We have to leave the range. So you guys see that we're in from this candle's high to this candle's low. We're in this gray box. As long as we remain inside this candle's high, this candle's low, that's time distortion. So I'm not interested in doing anything in here until we leave this range, either higher or lower. So just taught you guys a little gem there. How do you filter low probability setups? There it is. Seeing market maker sell model here, yeah, that's what I'm seeing as well. Zooming out, so market maker sell model here, original consolidation. That's why my attention is below these lows here. That's personally what my interest is in. But again, we could consolidate the rest of this PM session. That's going to depend on how we trade here. But again, none of this has me wanting to risk capital in. No interest in doing that. Jordan, do you use dollar index intraday for confluence? Yes, I do. I'm monitoring. So I have dollar open on another screen, and I'm looking at all the time frames that are salient, which would be the hourly, 15, and 5-minute. Yeah, appreciate all you guys. Let me know it was muted. No sound since you came back. All right, I think I covered everything I shared. GMX. So what's a signature to not trade the PM session? I feel like I know when to not trade the AM, but PM session is a different story. So as far as different sessions, it's the same thing going on in terms of price delivery. The only difference is the timing aspects. So the signatures that you'd look for in the morning session to qualify it as a non-trading day or a trading day, apply those same filters to the afternoon session with just the different timing elements in mind. Time distortion, should study that. Thank you. Jesm, how do you deal with FOMO? You backtest. Backtest a lot, study it, see your model form every single week, multiple times a week, almost daily. And then once you see that model forming like that, it gives you confidence that, okay, I don't need to worry about missing a trade. I don't need to stress myself out because the market ran off without me. Why? Because I have confidence. Again, confidence comes from preparation. If you're not doing the proper preparation and study behind the scenes, when real market data comes and you're trading live, obviously you're not going to be prepared for it. So the confidence just comes from preparation, and that's how you kill FOMO. You have to trust what you're doing, know what you're doing. And again, that comes through just proper preparation. Yep. So again, this is all time distortion here. The algorithm is just marking time sideways. So I'm just waiting for us to leave that either higher or lower. Even if there's conflict, ICT's concepts still work indefinitely. These concepts are going to work until there are no markets. If they take away trading from us completely, then that's when this stops working. But the algorithm's never changing. Man, it's like watching paint dry in here. When it trades into that SIBI, would you want to see a market structure shift and displacement? Yeah, exactly. That's exactly what I'd be looking for. So because I already have a bias is what a direction I'm looking for, which is what lower. We got the displacement that I was looking for. So now if we do trade up into this inefficiency here, again, I'd want to see the market show a willingness to want to drop. So I'd want to see us trade into it and then see another displacement like this here, confirming that institutional sponsorship. German Ortiz, hi Dylan. So we expect a silver bullet this afternoon. I'm expecting that. I'm going into it looking for a silver bullet. If you're a 5-minute trader and you trade a 5-minute chart and you don't like the 1 minute, well, when we traded into this inefficiency, I don't even think we hit it. This would be like the 5-minute entry or 5-minute silver bullet if you were a 5-minute trader. But I like to refine all the way down to the 1 minute. So I would allow us to trade into there, wait for the market to break down, and then that's where I'd get my entry. That's how I'd look at this as a 1 minute trader. Anthony, is it possible or a good idea to change bias going into 9:30 opening bell? Maybe if the analysis side didn't pan out before. So, I mean, if you know what you're looking for, 9:30 is designed to do that. Like if, let's say, for example, how I shared 9:30, how it gave that manipulation and it did 2 lower lows. That was to throw off reactionary traders. So if you're just there on a 1 minute chart, staring at the candles on a 1 minute chart go up and down, obviously you're not going to have a lot of conviction in what you're looking for. And that's what that 9:30 manipulation, that's why that comes into the market, to sway traders that don't really know what they're looking for and get them offside. So I would say if you have a bias, I would just stick to it. But obviously, you need to have an invalidation level. And what's an invalidation level? An invalidation level is, okay, when the market trades here, this setup is no longer viable. And that's how I'd go about it. Yeah, one of the fastest PM sessions of my life. Yeah. Yeah, again, just gotta wait for us to leave this range higher or lower. What if it doesn't take out these highs and breaks lower? Again, I need to see this low taken out here just to confirm that we're leaving the time distortion. Because if you're just in here looking for entries and we're just the algorithm's distorting time, it's going to make for very, very tough trading. So I'm going to wait for the confirmations that I'm comfortable seeing, which is we have to leave this range. Christopher, this is really testing our patience. Yep, that's how trading is. You got to be patient. You know, it's 90% waiting for the right setup, trying not to do stupid shit in between, and then 10% actually executing and taking your pound of flesh. So the best PM sessions happen after low probability morning sessions. But with the seasonality that we're in October, the market delivers pretty nicely all day around. So, and obviously considering all the events we have going on around the world, there's plenty of volatility in the markets. So again, this is all manipulation here, keeping it in this range. So understanding what I shared here, this is what keeps you from taking these low probability entries. Wasim, if the market leaves the zone lower, do you just chase it or just miss a move? I'm okay with missing a move. Like I said, I've been doing this long enough to know my next setup's going to be right there tomorrow. If it's not there tomorrow, it'll be in the afternoon. If it's not there in the afternoon, it'll be there the next day. So I've forged that professional mindset to where if the market leaves without me, I'm not concerned about it. But if it does break out of there, I wouldn't consider it missed because there's still plenty of range to deliver from where we're at to where I think we're going. So because there's still plenty of range, like I said, if I know where the market's going, I have no trouble getting in. I can zero in all the way down into a 30-second, 15, even 10-second chart, and I can zero in on that and get an entry. It's not chasing price because I have an extensive protocol for what constitutes no longer pyramiding or adding to a new position. And I'll just give you guys a small detail here. So where I think the market's going to where the move began, as long as we're in that upper range, I'm comfortable taking shorts there. But again, we just have to leave this range here. And then once we leave that time distortion, from the point we leave it back, I'm not looking at any of this price action here. None of this is of interest to me. And then I just go back to these reference points here. That's what the algorithm is going to be referring to. Isn't the winter months, October, December, more bullish as a seasonality? It is. It is. And seasonality is something I'm always taking into consideration. But seasonality isn't always a slam dunk. Just because it goes up in other years, typically, that doesn't mean it's automatically going to go up every single year. So it's a matter of using the seasonality in conjunction with what's the present market structure, what's the order flow indicating, and then with those things, it'll allow you to consider it. But seasonality isn't a silver bullet where, okay, you know, we're bullish seasonally these months, so let's just buy S&P. There's a lot of other things you have to factor in. All right, so we're breaking down lower. Thank you, Mystery. I appreciate that. Price now drop, true PM session. Yeah, that's what I'm looking for. Again, we've been bearish. And so now that we've traded here outside of this, I would be comfortable taking a silver bullet short here. Thanks, dude. Really appreciate it. Awesome. Mr. Frisky, see May of this year, bearish seasonal tendency, but we ripped this year. Even ICT was surprised by that. Yeah, definitely. So again, yeah, seasonals are a great tool, but they are not a be all end all for your analysis. So this inefficiency here would have my interest for lower prices, and we'd have to aggressively expand through this low here. Let me go ahead and put the chat over here. Do you use quarterly theory in trading? I do not. I do not. I know people that use it and find success with it, but it's not anything I use. So again, I'd look at this 1 minute here as the silver bullet short for this afternoon session. If we are to continue lower, we should aggressively expand through this low and not look back. So it should be an aggressive expansion lower. So again, we broke down here and I'm already forecasting us breaking out of this range. Looking at the 15-minute chart here, we traded up into this inefficiency, which is also balanced price range. So looking at where these two inefficiencies overlap, that's a BPR. Body's respecting that, rotating lower, breaking down. So that's why I'm going to be looking for lower prices here. So an invalidation level would be above these two up close candles. If we get above these two up close candles, then we may want to poke above these highs. And then I just have to wait and allow that to happen. Okay. All right. So monitoring price here inside these inefficiencies. If we are going to go lower for this PM session, I prefer to see us do so from here. So again, we're still monitoring how we're trading inside this inefficiency. If we're going to continue breaking down lower, I would want to see weakness inside this level here. But again, we'd have to see aggressive displacement through this low, not an anemic run like we've been seeing. So trading into this up close candle here. If we get through that, then we likely want to poke above these highs and trade back into this larger inefficiency that we're in. So weighing these things out, seeing if we're going to want to break down from here or pull back into here first. So trading into these last two up close candles. So I would no longer I'll let it ride out. What about the divergence between the NASDAQ and US 30? Yeah, exactly. So that's why getting above this order block takes us into these equal highs. And that's why, again, being patient here for this PM session. Again, this could be the silver bullet, but because there's equal highs here, we could want to poke into that. And again, we're still in this range. But if we are to break down from here, and this is the silver bullet short, we shouldn't get above this bearish order block. So that would be a invalidation level for this specific entry right here. All right, so nice reaction here from this inefficiency and bearish order block that we had our attention on here. So bodies respecting that beautifully. Let me go ahead and make that OB negative. So bearish order block in here, inefficiency, qualifying this as the silver bullet short. Bodies respecting that bearish order block. And again, we should expand lower aggressively. I wouldn't want to see the market continue messing around like this. We should aggressively start giving up the ghost. This down close candle here should not show any support. We should just melt right through it like it doesn't even exist. And then that would confirm to me that order flow is bearish. So again, PM session silver bullet here. And then if you're a 15-minute trader, what would your entry look like? It would have been in this fair value gap in here. So now I would look at this as a fair value gap. I wouldn't want to see us get above this here. So if we're going to remain bearish, we have a volume imbalance here and here. So now this high would be the invalidation level. So I told you guys the invalidation level would be above this bearish order block or these two up close candles. So now it would be here. So when I'm saying invalidation level, that sounds like a lot like a stop loss. But again, not giving financial advice here, just what I'm looking at, reading the tape. So again, I like to see how this 15-minute candle here, how we opened, traded higher, immediate rebalance, and now I'd want to see this 15-minute candle aggressively expand lower. But a lot of this hinges on how we trade below this low here. And again, that's why I mentioned that we need aggressive displacement lower through it. I wouldn't want to see us anemically take it out. That wouldn't be high probability. So trading into this fair value gap here now. So if you're a 1-minute trader, so many entries that are made available. And again, the market should start expanding lower aggressively here. So several opportunities to get entries on as a 1-minute trader. Again, we're talking in demo, so all this is just theoretical. So let's see if I can actually put on an entry. All right, smashing through that low as we'd want to see. Can I put on a trade on this demo thing? As you can see, I'm not used to the whole demo thing. Limit. All right, whatever. I got other accounts to manage, not messing around with this. But again, so I like to see how we're displacing through this low. And again, you guys don't need to see me put trades in to know what we're looking for. Silver bullet, what does that mean? Short, what are we looking for? These equal lows here. Broke out of this time distortion low. Looked at this fair value gap real time. Said this one was inversion. We wouldn't want to get above that. Trades into it, smashes lower. So exactly what we would want to see. So now this here becomes a mitigation block. This old bullish order block becomes bearish. So I wouldn't want to see us get above that now. Maybe it's slow because FOMC tomorrow. Again, we just left time distortion, folks. So again, I covered why we were in time distortion, why we were consolidating, but we've left that now. So now the market should start moving around as we would expect. I took that short and went out 5+ handles. Awesome. Again, I don't like to see how we traded through this low and now how we're pulling back into the range like this. The market should accelerate aggressively lower if we are to remain bearish. And that is not what I'd want to see. So again, I wouldn't want to see us get above this high. If we do, then we likely go for these highs here. Yeah, so really sloppy session. And again, I said that if we were to go below this low and going to continue accelerating, we should displace through it. And again, this market structure isn't anything that has me too terribly interested in wanting to risk a whole lot of capital in. So finally started moving. Yeah. Real setup could form post 1500. Yeah. So we just took out this high here, swept the buy side, and then we bumped the low end of that daily fair value gap. So I don't think I've showed you guys a daily chart. So let's go ahead and pull that up, show you guys what these levels are anchored to. So again, this was the daily inefficiency that we were looking for, this red rectangle, and we've traded into that. So when you're looking at the red rectangle on my chart, that's what it is we're seeing. So I show you that to share why this reaction here is something I'd want to see. So we took out the high. That's fine. Looking at the 5-minute chart, nothing's changed fundamentally. So I wanted to sweep the stops, but now we should break down. How far above this high can we go and me still feel comfortable? This level right here. And that's the type of reaction that I would be looking for. But again, just a sloppy delivery overall, trading lower, pulling back into the range. Again, this is not high probability market structure. The real setup could post after 3 o'clock. Yeah, definitely could, for sure. So again, still bearish, still looking for lower prices. So we hit the low end of that daily fair value gap. That's a signature I'd look for. But now the market should start moving its ass and start expanding lower. So again, we just cleared the stops there. That's fine. SMT with the NASDAQ. NASDAQ didn't actually make this high. So just running on the stops here. But again, we should break down aggressively here now if we're going to do it for this session. Just dollar. Why are you expecting lower prices? I already covered that at the beginning. These equal lows here. So that's why the recordings are made available so you can look at those things. Taj, that was still 5 points. Was it? Fair value. Yeah, I guess it was. Yeah. So from the silver bullet here, from this fair value gap here, paid 5 points. So that was enough for the trader to be paid. That's why partials are important, because let's say you did go short here, 5 handles paid, even on the retracement, you're not stressed out, you're not concerned. Why? Because you've already paid yourself. So one, obviously, you've taken something to the bank, but two, most importantly, you've reduced the risk on the trade. So that's why partials are really important, in my opinion, especially as a beginner trader. Well, once you know what you're doing, you're comfortable holding for a range expansion. Obviously, you can just let it rip, but early on, you definitely want to take partials as a crutch. Yeah, GMX, that's what I was covering with the daily fair value gap, seeing how we were unable to even hit 50% or midpoint. That's a bear signature. But yeah, so none of this here is very promising. So we're hitting this bullish order block in here and not aggressively expanding through it. So if I was short, I would be taking something off here just because this is not the highest probability signature that I want to see. So I'm constantly reading order flow, seeing, okay, is the market showing me what I want to see, or is it not showing me what I want to see? And actually, one of the best things that you guys can actually see here, you guys are so used to me coming in front of you guys, telling you what's going to happen, and obviously it happens. But how do you react if it doesn't go in your favor? Those are all things that are important and huge aspects in professional trading. The reason I'm comfortable taking trades, I'm not fearful. A lot of people ask me, how do you get so comfortable in your trading? How are you not fearful, when you're doing executions and everything? It's because my risk management keeps me in the game. I know I can be out here in front of you guys today. I can take 3 losses in a row, come back tomorrow, make that back in one trade like it's nothing. So because of that, that gives me confidence. I'm not fearful of losers. As I said, I could take 3 losses in front of you guys here today, come back tomorrow and still close out the week profitable. That's the professional mindset you want to have. Not how can I over leverage and just get a huge payout and, shit, if the account blows, well, damn, it was just a reset fee anyway. That's not the mindset you want to have here. So even if I do get stopped out, it's not the end of the world. Why? Because I'm a professional risk manager ahead before being a trader. Do you trade only ES? I'm not limited to S&P. I'll trade NASDAQ as well, but for the most part, that's what I focus on. Gross price action, PD arrays being disrespected on both ends. Exactly. So that's something that I'm looking for as I'm measuring and probing order flow. I want to see respect for levels. Like, for example, when we come on other days, the market's moving, it's, in a hurry to get somewhere. It's really easy to read the market on those days, because it hits the levels we're looking for. I say, okay, we shouldn't get above this. We should turn here. And then it's doing everything on a dime, exactly as we're expecting. These types of days here, it's lower probability. And again, the signatures are communicating that to us. So the algorithm's always indicating what it's going to do ahead of time. And a lot of people just see this as, oh, this is just noise. The algorithm's not telling you anything. When in reality, it's telling you a whole lot. And it's communicating that this is not a high probability session. So is this a session I would want to go in and risk my highest leverage? No. But those are the professional aspects in this that make you successful longer term. Are you taking the same leverage on a day like this, or when it's all one-sided? That's where the problem lies. So you got to understand what conditions you're in, and then you have to manage risk appropriately. Twisted, love you and your content, by the way. Thank you. Advice for struggling traders in terms of picking an ICT setup. Just tape reading, just sitting in front of the market live, observing it, studying it, and watching it do what it does. And then over time, that'll give you the confidence you need. But again, low probability. So I touched on how this bullish order block hitting that That's a problematic signature. And then trading higher, that's not what I'd want to see for lower prices. So now the fact that we've traded above this again, my attention goes to these equal highs. Again, not as anything to take a trade on, but just observing here with you guys. Are you everyday live? No, I'm not. Just dollar, you'd actually be surprised how much I'm risking per trade. I'm not risking any more than a 0.5% per trade. Trades I really like, I'll risk up to 1.5%. But yeah, I'm very comfortable just risking 0.5%, and I can do numbers with just that. So you don't need to risk a lot to make a lot. And risk to reward, that's nothing I really pay attention to. I just look at what we're looking at, what range am I working with, what's the draw and liquidity, and then my trades managed on that. I'm not going into the market saying, okay, I need a 3R or a 4R, or if not, I'm not interested in doing anything. I take what the market's given me and I go based off that. All right, so the market breaking down again, very, very sloppy. But we did see an SMT here with the NQ. We are working the 5-minute NQ. 0.5% of what? Of my account. It's just straightforward math. So if the account's 100,000, you're risking 0.5%. That would be $500. Yeah, so I'm studying this being a potential breaker. So we ran above the highs and then we broke down through this low. But again, the market's not really giving me much. And then looking at NASDAQ here, we're still in that range from this high to this low. So again, we're just still distorting time in here. I was thinking S&P would want to break lower and continue, but it's not giving that. So again, it's got to take what the market's given us. But looking at the 15-minute, again, nothing's changed. The market's still weak, but it's delivering it in a high resistance manner. High resistance meaning it's just not delivering like a knife through butter. It's a lot of consolidation and back and forth. Let's see power 3 on NQ, take out the highs and go lower. Yeah, that could do that. Again, this is a condition where I don't have strength in, and that's a strength as a trader, is recognizing, okay, what are the conditions that are high probability and low probability? So if I'm seeing this market structure, and again, I wasn't in front of you guys, I would be doing something else. I would not be interested in trading this PM session because it's frustrating price action. It doesn't deliver what we want to see. It's not respecting the levels I'd want to see it do. And this isn't a condition where I would want to risk capital in. Yeah, so I'll stay with you guys until the last hour. Again, it may want to give that setup into the 3 o'clock hour. So I'm seeing how we're trading in this fair value gap. So we have these two up close candles, bearish order block. And again, even that same bearish order block that we were looking at still being respected. Look at the bodies here and here. Again, wicks doing the damage, coloring out of the lines, but the bodies are respecting that. So I'm still leaning bearish. I'm still favoring lower prices. But is this a condition where you can map out a low risk, high probability entry? Probably not. So that's what would prevent me from wanting to take a trade. Tough session. And truthfully, I was actually thinking we'd have a nicer PM session, considering that the Fed member was speaking, but it needs to break lower now. Yeah, I'd prefer to see it break from here, but the fact that it's not willing to deliver, that's what has me extra patient right now. So there's two silver bullet windows for the PM. There's 2 to 3 and then 3 to 4. So if you don't get the setup from 2 to 3 and it's consolidating, then typically expect 3 to 4 to give a nice one. Matthew Davis, do you use handles for risk to reward? Yeah, so typically my stop losses aren't more than 5 handles. I typically look to position myself with a 5 handle stop loss. And determining the ranges we're in, that's when I'll determine how many contracts I'm going to be trading, and then that's going to determine the leverage. So again, this would not be a short just because the structure that we're in, down close candle, not accelerating through it, seek and destroy, taking out short-term high, short-term low. So that is a problematic signature for looking to take a trade. So again, we have to decisively break out of this range for me to be interested in this market. So one of the other, so again, when I'm giving you guys these conditions that I'm looking for example, saying that if I want to see these lows taken out that I'm looking for, and again, it may not do it today, it may want to do it into tomorrow, which is fine. We'll take down the setup when it presents itself. But saying how, okay, we're trading through this low. I want to see the market break down through it aggressively and not look back. Did we do that? No. So that's red flag number 1. Seeing how we took out this high, okay, maybe we just want to sweep the stops and break lower. But then it hits the down close candle, bullish order block, trades higher. Red flag number 2. So I'm weighing all these things out when I'm in a trade, and my stop loss would still be above the bearish order block. That would not move yet. We haven't moved away enough for me to confidently move that. But seeing these problematic signatures, I would just abort the trade in here if I was in one. I would get out here, not want to touch it because it's not doing what I want to see it do. And that's a really valuable skill set. A lot of times as traders, you may find yourself getting into setups and just sitting there and wrestling it for 30 minutes, 45 minutes, stressing out. The market's not moving. It's just chopping. This is how I learned to filter that. Because again, like I told you guys, I was there where many of you guys are at now, getting in, getting chopped up. But once you understand how to learn and read what it is I'm teaching, it'll prevent you from having to endure those things. Yeah, Matthew. So I did move the mentorship to the January. The price reservations, we'll have that in November. So November, the website will be out. and then November, December, we'll get everyone enrolled, get everything organized, and then we'll get to work in January. And again, I covered some of the reasons why, mainly because it's the holiday season. A lot of people are going to be taking vacation, spending time with family, and I wouldn't want to interfere with that because, obviously once we get to work, even though I'm going to be training you, it's still going to require a lot of legwork on your end. And those are all things, again, I'm going to cover before you sign up, because obviously you have to know what you're getting yourself into. It's not just going to be watch the videos and become profitable. You're going to have to put a lot of work in yourself, but obviously the payout is enormous. So I'm going to look for these equal highs here now to be a draw, given that this down close candle here, bullish order block supporting price, not able to get through it. So again, if we were to be bearish, I said how we would have to aggressively expand through this for me to be confident, continue being short. And again, the signatures just aren't aligning for what I want to see. And that's fine. That's fine. I don't need to take a trade every day. I don't need to be in every single setup. And that's all part of professional trading. King, will you keep Telegram group open during the mentorship? Yeah, it'll still be open, and we'll be active in there, but not as much, obviously, because my attention will be on getting my clients to be successful and get to a point of independent trading, and that's where my focus is going to be. Any comment on DXY? So Forex goes to sleep for the PM session for the most part. So looking at dollar in here, it's not really doing a whole lot when I wouldn't expect it to. Just the fact that it moved higher, that was enough for me to have interest in potentially looking for lower prices in the stock market. But even if it consolidates, it'll permit the stock market to do whatever it wants to do. So it doesn't need to be going higher, just as long as it's not screaming lower. That's what I'd be looking for in terms of signatures. There's a lot of things to weigh out as traders. Is there a criteria for when breakers won't work as well? Yeah, everything I'm covering here. For example, let's say you were to short this fair value gap in breaker. Why isn't that high probability? Because everything I covered. Again, so that's why you have to adopt the mindset of understanding liquidity and efficiency and time, not just looking for patterns. Because if you're just in here looking for patterns, again, that makes for very, very difficult trading. And that's something I wish I learned early on. But you have to be able to read the narrative of the candlesticks, understand what it's communicating to you, and not just go in and look for patterns. And again, all of those, the things that I've covered in the last hour, again, it's not flashy. It's not as fun as it usually is where, we're calling targets and it's running right to it. But trust me, those are the things that as a trader that you want to know. You want to know how to identify low probability, identify what those signatures look like and how to stay out. Because these are the days where you blow your accounts. You're not blowing your accounts in price action that's just one-sided. You may get FOMO, you may get pissed off you missed the move, but you're not blowing accounts in here typically. These are the conditions where you guys are blowing accounts in. Because I did the same thing. I've been there. So how do you understand the signatures that the market's preventing, and then you prevent trading in these conditions? How do you stop blowing accounts? How do you keep your account? Again, these are all the things I'm teaching. So we just took out these clean highs here, and then aggressive repricing lower. NASDAQ did the same thing. AB, bummer I could join for the high resistance liquidity run. Yeah, I remember you trying to get on the other day when it was cleaner and weren't able to. But it's, again, like I said, these lessons are, trust me, just as important, if not more important, than the days that are a lot more fun and it's delivering. Because if you can't keep your equity in these types of days, what you do in cleaner delivery doesn't matter because the market left with your ass on these days. And if you're not able to protect capital in these days, again, it doesn't matter what you do on clean days because you're going to give it all back on these types of days. So again, these are the lessons that you want and that you want to have in the forefront of your mind. Yeah, so ES rejected the high. Yeah, so now this has my interest now that we took out this high, broke down lower. So what I'd be looking for here now is for this fair value gap here to act as inversion. All right, so we're getting what I'm looking for here. Flash the NASDAQ real quick. NASDAQ has cleaned out these highs, and then we've rejected it lower. So that's what I wanted to see. I wanted to see this done earlier, but it's doing it right now in that macro window. So we're in the macro window from 250 to 310. So again, now that we're kind of leaving the range, market's running liquidity, I'm going to look for signatures that I'd want to see set up in price. So here we have a inversion fair value gap here, extending this through. I'd want to see some sensitivity there. For moral support, more than 95% of traders fail worldwide. Absolutely. And those statistics are absolutely true. And I'd even argue that it's higher than that. So, what most traders don't understand is, they're pissed off about not making profit. But if you left with your ass, man, that's a good day because most traders aren't even leaving with their ass intact. So those are all things to keep in mind. And then if it's sloppy, you take no trade. That's not an issue. Yeah, so I got a question about turtle soup. Yes, so this would be the basis for turtle soup. So again, we're bearish. We're looking for lower prices. We trade into a buy side here, but what's on the other side of that buy side? There's that fair value gap inefficiency. So that's where your turtle soup setups come in. But again, you have to understand where the market's going, why it should go there, and then that's how you can trust turtle soup, fair value gap entries, and all those things. Yeah, so looking at this inversion, fair value gap here, extending this through, and then seeing that reaction there. And if we are to go lower, I wouldn't want to see us get above this high. Abraham, should I shut off the camera? You're saying there's quite a bit of lag. Should I shut off the camera there? I don't see any lag here on my end. I think everything should be good. Oh, it's actually saying the connection's not that good. Let me see. Yes, turn off. All right, awesome. So I think I need to get the camera turned off. So screen class, awesome. All right, so can I make sure you guys can still hear me? Apologize. I guess we're having technical issues on this end. I'm getting lag too. I feel like it's too high on the buffer rate. Yeah, that's strange. All right, so if you let me see, you guys can hear me. Awesome. All right, so just make sure you guys can still hear me. So I guess I turned the camera off. I think that should help. So again, now that we broke down here, so we hit the inversion, fair value gap is resistant. So now signatures are starting to align that I'd want to see. So now I'd be able to trust this fair value gap here as a silver bullet short. And that's what it is that I'll be looking for here. Jonathan Velasquez, I miss seeing him watch paint dry handsomely. Yeah, so I guess the market structure was boring, but at least I gave you guys a little bit of a show on the camera, huh? Macro time, you can use an FX, yeah. All right, so everything's good on the signal side, awesome. So you guys can hear everything, great. So again, these 1 minute fair value gaps, that would have my interest for a short. I wouldn't want to see this one filled, I'd want to see that remain a breakaway gap. So now I'm expecting us to deliver lower to the levels we were looking for. Again, stops ran out and then we broke down aggressively. So now we get confirmation. So now that's what would make this a high probability trade. So when I'm sharing here and I'm extending that inversion fair value gap through, and I'm saying that we should start seeing sensitivity there, I'm saying that now obviously I'm looking for lower prices. The signatures and price manifested that I'd want to see. So now I'd expect the market to start breaking down as a result. So this not inversion, this volume imbalance here. So again, I would see this fair value gap in here as the short, and I wouldn't even want to see us trade higher into the premium end of this. I keep seeing this unicorn setup. I'm not sure what that is. Are you guys talking about a breaker, or do I not understand that correct? So again, I would look at this fair value gap here. Covered. Make this purple. So this would be the PM silver bullet. But again, an aggressive entry could be here inside this fair value gap, just because we have a breaker here, which would be high, higher, high. This down close breaker here. So this one could be a breakaway. So how would I treat that? Let's say I was trading and I was looking to go short. I would sell short. Let's say I wanted to build in a 4 contract position. I'd sell 2 contracts here just to get something on in case it runs away. And then if it delivers into this one, then I'll put on the other 2 contracts for my full position size. So that's how I treat that. So if I'm expecting a breakaway gap and I don't want to see it fill in all the way, I'll enter to get something in. And then if it delivers to where I think, then I'll put on the rest of the position. But again, this is the PM silver bullet short that I'll be looking at. Unicorn breaker, fair value gap. Okay, gotcha. Fair value gap aligning with the breaker. Understood. Gotcha. And Q already tapped in. Yeah. So if I was in NASDAQ, that would be the setup there. So if I'm really aggressive and I'm like very bearish and I expect the market's going to start to run pretty aggressively, I'll use a correlated asset for an entry. So let's say I want to trade S&P, which I am, and I'm watching NASDAQ obviously on my other monitors. As soon as NASDAQ delivers into this fair value gap, I would feel comfortable selling short S&P using it as an entry. But again, that's on a day if I'm really bearish, everything's in alignment, and I want to make sure I'm in. I'll even be able to use that as an entry. So again, the entry is the easiest part. And that's something, you know, that when I'm working with clients, training and teaching, that's how I teach. You know, you got to understand how to read price action first, where the market should go, why should it go there? And then that's what's going to make your entries high probability. That's what's going to make your targets high probability. All those things are a result of understanding how to read price action. take that off. So watching price here inside this fair value gap and breaker here, this down close. Perfect. So that's the reaction I want to see. I want to see immediate dynamic repricing away from the levels I'm looking at. Not like here, where I'm looking for expansion lower and it immediately pulls back. This is sloppy price action. When it runs into the levels I'm looking for and then immediately reprices away, those are the signatures I'm looking for to trade in. So now looking at the 5-minute chart. So for 5-minute traders, the silver bullet would be on this time frame right here. That's what I'd be looking at on the M5. But again, because I prefer to manage risk on a 1-minute chart, I would take my entry right here for a silver bullet short. All right, and then one moment, guys. I'll be right back. I'm going to talk to the technical support real quick. Make sure we got everything good and you guys can hear me all right. 1 second. All right, we're back. So it's really weird. Internet's good. Everything's good on my end. I'm not sure why it's doing that, but all right. So looking at this fair value gap that we're trading in here, 3 o'clock candle just opened, so be mindful of that. But again, I'm still looking for a reaction in here. So we repriced to the high end, which is fine. That's not problematic, but I would need to see the market sell off from here. Yeah, NQ's not delivering cleanly as I'd want to see. Lael, I think the stream cutting out. I think that's a connection issue here on my end. I don't think it's on your end. I think it's YouTube actually. I think because everything's good here with my internet, so I'm pretty sure YouTube's giving me issues. So pulling up the handy dandy 5-minute chart here. We're trading higher into this fair value gap and up close candle, bearish order block. So again, if this is the silver bullet short as I covered, I would want to see a reaction from that bearish order block. So we should start selling off from here now aggressively. So I'd want to see us aggressively expand out of this lower and then gravitate to these lows. But let's say it doesn't reach these lows in this session. As long as it delivers half of it or close to it, there's a room for profitability, or I mean potential profitability there. So you don't always need to have your targets hit for the trader to be paid, and that's why partials are always a big thing. Don't always demand that the market deliver your objectives. Can we get, really animated in this last hour and deliver 25, 30 handles? Yeah, we definitely could, but I'm going to be paying myself along the way in the event that it doesn't do so. So back to the 1 minute chart here. Let me go ahead and just make this on this time frame. So now that we repriced to the high end and then we've traded below it, I wouldn't want to see us get above consequent encroachment. I wouldn't want to see us get above midpoint of this inefficiency anymore. Everything's good except the price action. Yeah, Daniel is definitely YouTube. Yeah, that's what I'm thinking. So if I was in a trade here going short on the 1 minute, I would have what's called a time filter on the trade. So again, I have things I'm looking for to invalidate it in price. So like I was saying, I wouldn't want to see us get above the consequent encroachment now, or midpoint of this. If we're going to remain weak, I just want to see us sell off from here. But another thing I'm applying is what's called a time filter. So if it's not delivering within 5 to 10 minutes what I want to see, that's enough for me to close out the trade. Because, one thing you learn pretty early on is that if the market's not running for you, it's not going to pay you. So laying dogs don't make money. So you need the market to run for you. And if it's not doing that, I give it time to show me. I give it 5-10 minutes to show me it wants to run as I'm expecting. But if it doesn't, then that's a reason for me to close out and be done. Where would a stop be? So if I was short inside the silver bullet, I would not want to see us get through the, I wouldn't really want to see us get above this candle here, 43.98, because we have a breaker, fair value gap, inversion. So a lot of PD arrays there. I wouldn't want to see the market trade through. But again, this is not the cleanest day in terms of delivery. So sharing what I'm seeing, giving you guys a gun to my head, not just calling it 50-50. But again, this is not the highest probability scenario. So this wouldn't be a day where I'm trading with my maximum risk. Would I trade the AM session tomorrow, even though there's PM FOMC? No, I wouldn't. That wouldn't have me too interested. But because it's just the FOMC meeting minutes, it's not the actual like rate announcement or anything like that. I'm not expecting the typical flurry of volatility that we see in the minutes, because the minutes is just a recap of what they discussed in the previous meetings. So I'm not expecting it to be anything too crazy. But yeah, again, so this is problematic in here. So again, not seeing what I'd want to see in terms of delivery. We still could go lower, but it's not delivering how I'd want to see it do. So this would be enough here to close up shop and not be interested any further. Blue Shark, that's a good question. So if I was trading today, yeah, I would reduce my risk significantly. So I'd risk half of what I normally risk, just because I wouldn't want to be highly leveraged in a day that's just not likely to deliver for me. Because again, here I'm looking at NASDAQ on another screen, traded through the fair value gap, closing above it. So just very, very sloppy delivery, not seeing what I'd want to see. So usually when I come on with you guys, for the live streams here, we're looking for targets, market runs to them, and is doing it in a very organized and clean delivery. And that's just not what we're seeing today. I tip my hat to you guys with regard to, or tip my hand in terms of what I want to see, what I'd be expecting in terms of drawing liquidity, how I'd want to see it deliver there. And the market's just not giving me that, and that's fine. But again, still seeing the bodies respect this fair value gap in here. AB, NQ sitting under regular trading hours. VWAP, sometimes just wicks and falls. Do you have any screens monitoring VWAP? No. I don't have VWAP moving averages. I don't have anything like that on my charts. Not saying they're not useful. Some people may prefer them as like a crutch to help them, see what the market's doing. But for me personally, I don't need the VWAP. So again, seeing the body still respecting that, so that's not problematic. Again, I would have preferred to see us already deliver lower, as already covered several times, but closing right at it doesn't invalidate it. If we were to close above it, that would be a reason to kill the trade, but just the body's respecting that, that's not problematic. And then always looking at the higher time frame, you're seeing this retracement here on a 1 minute, thinking, wow, man, the S&P can go to the moon. But then you look at the 5 minute and see, okay, all we're doing is trading into this fair value gap and bearish order block. So that's why I always bring up, especially in training and when I'm working with clients, is not to just get lost on the 1 minute chart. You have to understand the time frames top down. And also, again, looking at the 15 minute, all we're doing is trading up into this up close candle here. Whereas on the 1 minute, it looks like a little bit of a rally, but as long as you have your bearings on the other time frames, it's not. So we're about to enter into the market on close macro here, 315 to 345. Again, covered this silver bullet short, saying how an invalidation level would be above this candle's high. Do you care for SMTs? Yeah, I do. I factor SMT into my analysis for sure. 3 drives pattern? Yes. Yep. 1, 2, 3. Yeah. So we should break down because of that. Jay, would I look for consequent encroachment of the 15-minute upside wick? Oh, this wick right here? Yeah, so if we started trading higher through there, that would be a level I would be monitoring on the 5 and 15-minute, the wick. So let's go ahead and refine this inefficiency here. So if I wasn't a short, the market would absolutely have to sell off from here. Let me go ahead and make that red. So the market would absolutely have to sell off from here. Getting above that, that would just cancel my interest for the rest of the PM session. Amir, I don't think you're right. If I got inside a trade, there's a reason for that. Target or stop loss, not more, not less. Yeah, there's a lot of different ways to make money. As you get more seasoned and you know what you're looking for in the charts, and you learn how to read price action, you'll understand that it doesn't always need to hit your stop loss to invalidate it. It can invalidate your trade idea by doing other things. And obviously, you wouldn't want to take a full hit if you know it's going to likely stop you out and you can get out earlier. So that's how I look at it. But again, there's a lot of different ways to, find profitability and success. One isn't better than the other. Like I said, there's people trading, retail support and resistance indicators, the whole 9 yards, and they're still doing millions of dollars a month. That's just because they're good risk managers. They know themselves. So again, there's a lot of ways to make money. Obviously, I'm biased. This is superior to everything in my opinion, but there's lots of ways to make money. So again, look at the bodies there, respecting that fair value gap here. So now the market would have to absolutely expand lower here. Yeah, so if I wasn't any trades today, then I would be out. I would be flat and neutral. because yeah, this is extremely problematic. And then usually, as I say, when I'm demanding these things of price action to show me certain signatures, it's usually pretty dead on when the market's running. But when it's not, like I said, the market's communicating that as well. You just have to learn how to read that. Yep. See you, David. Take care, my man. All right, flatten. All right, so yeah, this caps my interest here in the for the morning session. All right, so let's go ahead and review the morning session real quick. A few guys were asking me to do that, so go ahead and take a look at that for you real quick. Yeah, this definitely cancels all my interest for the afternoon session. Just real sloppy delivery overall, not showing the signatures we'd want to see, and not interested in that from here. Yeah, if you were short, last line in the sand would be here. Yeah, we shouldn't get above that. But just the delivery itself is problematic. So even if it does end up delivering to those lows that I'm looking for, and let's say it does it today, which I don't think is likely, if it does do that, then it's probably not going to do it in the best delivery like we saw here. It could be a lot of give and take, and these aren't conditions I prefer to trade in. So like I told you guys, if I would have started seeing this delivery here and I wasn't on YouTube with you guys, I would just close out, and I would just go about my day. But because I told you guys I'd hang out with you guys here on YouTube. Again, that's why I meet my goals in the morning, come out, hang out with you guys, look at price action. But again, none of this is very promising for price action. Daniel, see you on the next one, my man. Thank you for your time. Absolutely. Thanks for the appreciation. J.I. Fish, awesome. All right, so yeah, let's go ahead and look at the morning real quick, and then we'll go ahead and wrap it up. So pretty uneventful afternoon session. Take this off. All right, so going into the morning session here, we saw a consolidation throughout London. And then again, I took your guys' attention in the Telegram channel to this high here, here, and here. So these were my 3 upside objectives we were looking for. And I remember someone sent me a entry trying to go short, like in here. And not that that's incorrect, but you're trying to short when the market's bullish and it's reaching higher. So that's why that was a stop out if you're listening. But our targets were higher. We were looking for the daily fair value gap. Can I pull that up? Anita, thank you. Everyone hit that like button. Yeah, thank you guys very much. If you guys hit the like button, that helps us out here greatly. And again, it keeps me motivated to come out here and hang out with you guys. So again, we were looking for the buy side and then this daily fair value gap. So that was our draw on liquidity. And then I also shared with you guys earlier in the stream how I refined that further. So if I'm expecting the market to want to expand higher, I'm going to look for regular trading hours liquidity voids that haven't been filled. So here we see this huge gap down. Here, there was no trading. From this candle's low to this candle's high, no trades were booked in there. So I'm extending that range through. Because again, I covered before how liquidity voids, obviously, if it's in line with what the market's already going to do, it's one of the strongest algorithmic draws. And then that's what I was looking at this morning. That's why I was going long, again, into the buy side, into the daily fair value gap, but more specifically into this void that's here. So now dropping lower into the 15-minute. So consolidation. So here we have accumulation, manipulation, distribution. So I think it's cleaner on NASDAQ actually. Yeah, you can see it a lot cleaner. So here we have AMD, accumulation, manipulation here, and then the distribution higher. So back to the E-mini S&P. Trade lower SMT here with the NASDAQ. So when NASDAQ is making a lower low, S&P fails to. And then we traded higher. And then as far as the entry itself, again, it was a pretty tough day, but I do have this inversion fair value gap here marked out. So again, here we see we're bullish, our attentions were higher. So I like to see instances like this where they leave equal highs here and equal high here, and then they pull off it. Why? Because I'm already seeing this as the Judas swing, or the manipulation, the fake move. And then I'm looking for a price to deliver to this level here, the 43.83, which is the high. That's the high on the hourly chart I shared with you all. And then this daily fair value gap was the other drawn liquidity we were looking for. So as soon as we closed above here, this candle, as soon as we trade into it here, 5-minute traders, that's your long entry right there. Into the inversion, buying here. That was the long on the 5-minute chart. And then after that, it was off to the races. There was no other entry unless you would have traded here. But in my opinion, we already kind of repriced the levels that we'd be looking for. So this to me wouldn't be as high probability as an entry. All right, so back to the 1 minute. So now let's go ahead and get into the entry. So a lot of people are asking me, how would you position yourself on the 1 minute chart here? So again, this is that 5-minute inversion fair value gap extended through the curve. We got above it, support, hitting that level perfectly, and then we were off to the races. So again, this is all consolidation. When do I expect us to leave this time distortion here? At 10 o'clock. So we get into the 950 macro. So 950 here to 1010, we leave that range and displace higher. So my silver bullet long was just buying right here. So as soon as we trade down close candle, what's that? A bullish order block with a fair value gap. So that's a really high probability order block. We hit that opening price here beautifully, and I'm buying inside that fair value gap and order block here. I pyramided once more in here, and then I rode out this run higher into the daily fair value gap. So that's what I was looking for here. Yes, but there is no sweep. Equal lows. Yeah, it doesn't need to take out these lows. Again, that can just be for a later time. But was this not a stop run here and here? Yes, it was. And NASDAQ actually made a lower low. So again, I covered the NASDAQ, saying how NASDAQ made a lower low here, whereas S&P didn't. So this is the stop run. So the stop run occurs there. Then we break up higher. So trade out of this range. Again, I would have liked to have gotten something on in here, but because of this problematic market structure, again, this is where I do not do my best as a trader. So if I know that, I'm going to wait for better conditions to manifest themselves. So I waited for the market to do what? Leave the range. I wish I would have got something on here, but I wasn't quick enough on the draw. So I had to wait and then get in here. But again, it was still a valid entry because there was still, at least from where I entered to where I think we were going, it still offered at least 10 handles. So because it still offered 10 handles a run of potential profitability, that's why I was still comfortable entering here. So again, traders that trade on a higher time frame, probably a little more difficult to get a entry, but that's the trade-off you have. If you're trading on a higher time frame, obviously it's going to be more difficult to get an entry in these types of days where it's just ripping higher. Yeah, Matthew, missing a move, no big deal, part of trading. Where would you put a stop loss if you entered at the 5-minute inversion? That's a great question. So again, there's so many different ways to trade. If you're a 5-minute trader, again, like I said, that would have been the entry. Stop loss would go right below these two down close candles, so that bullish order block. So entry there, stop loss would go right below here. Why? Because we shouldn't get below the down close here. So whenever I'm training, whenever I'm mentoring, I share how to find these setups on all time frames. So again, you guys know I'm a 1-minute trader, but I need to be conscious of the fact as a mentor, as an educator, that 1-minute time frame doesn't suit everybody. So I'm able to train you how to take entries, how to take setups on all time frames. Because first, again, you got to understand how to read price. Then once you know how to read price, then trading's easy. But a lot of people are skipping over that. A lot of people want to go into the trading and they don't even know what they're looking at. And then that's why they're struggling. That's why I get messages like, hey man, I'm struggling. I have a funded account. I've been blowing it out. And, not going into drawdowns is a lot different than blowing accounts. A lot of people reach out to me how they're blowing accounts over and over again. And if you're doing that, you just need to take a step back. You need to figure out what you're doing this for, learn how to read price action, and then develop a model around that. That's the proper way to do it. And then, so for the 5-minute, and then we expand higher. We fall just short of consequent encroachment, and then we break down. And then here we're in this consolidation. Leo ICT says he wouldn't trade in every week. Yeah, it's pretty funny. He says that pretty often. Do you think today is the high of the week? It depends. Let me check the economic calendar real quick. So we have CPI on Thursday. Yeah, so I'm going to be reluctant to tell you this is the high of the week. Usually I will, like if I, suspect that the high of the week's priced in, I'll look at that. But given that we didn't really accelerate lower like I would have wanted to see this afternoon, they could want to punch it up into those highs once more. Because looking at the NASDAQ on a 4-hour chart, I'm still exploring the possibility of the market maybe wanting to clean up these highs. So I haven't completely I don't completely see this as the high of the week, because again, we could still poke up into these highs. So that's something I'll be monitoring going into the London session, going into New York session tomorrow. So that's what I'll be monitoring. So I believe I covered the entry, what I was looking for, the draw and liquidity. Shared with you guys how I got in on the 1 minute. So I think everything was covered there. Matthew Davis, how do you tell when there's time distortion? So it's a big experience factor. Experience tells me that. But when I see the market just going sideways and not respecting any PD arrays, and it's staying between a defined range, that's usually what will communicate time distortion to me. All right, so I think that's going to go ahead and wrap it up here. See if there's any more member questions. All right, we should be good to go. All right, so pretty uneventful PM session here, but again, a lot of valuable information that was shared. So hopefully you guys were able to glean something out of this in terms of knowing what conditions you don't want to trade in and why it's frustrating to be in these types of conditions, how to recognize them, and then of course, trade accordingly. So with that, I think I'm going to go ahead and sign off here. Take a look at NASDAQ real quick. Yep, so again, sideways. Very, very tough day. And that's because of the Fed chair speaking at 1. A lot of manipulation in here. And then the S&P doing the same thing. So overall, sloppy day. The market not delivering as we'd want to see. I showed you guys what problematic signatures look like. And this was actually the best thing that could have happened, because again, a lot of you guys are used to me going on here, calling targets, and the market just runs. But how am I trading? How am I managing myself when it's not doing that? So overall, this was a good lesson. And that's a lot of what Mentorship's going to look like as well. It's going to be me sitting in front of you guys on all different types of days, not just the best days, because you got to understand how to navigate these days. Again, if you are a trader that, you can't keep your account, you can't keep equity, and you keep going into severe drawdown, that's these days that are doing it. So as soon as you can learn to recognize it, step away, that's what's going to allow you to step into a professional trader. So it's not just always give me the entry model, tell me where the market's going. There's a lot more things you have to consider, and you only pick this up working with a professional for a extended period of time. So with that, again, I think that's going to wrap it up. So make sure we have any more questions. Lisa, I'm a new member. Thanks for the live stream. Awesome. Thank you for joining, Lisa. Your support is much appreciated, and thanks for joining us. Christian Cadet, thank you, Dylan. Great information as always. Making me learn these types of conditions. Absolutely. Very valuable to know. Thank you for the time. Priceless. Absolutely, Joe. JS, thank you. Drissa, thank you very much. High value content. Much appreciated. Thank you. Curtis, I'm a better trader every time I have the opportunity to review your analysis. Awesome, my man. Glad to hear it. J.I. Fish, live tomorrow, please. I'll look to do maybe 1, maybe 2 more this week. We'll see what we have. Maybe I'll get on a stream for the FOMC meeting minutes, and we'll see what we have. Denisha, thanks for hanging out with us. Makes a difference. Awesome. That's why I'm here, and I really appreciate the appreciation for that. Matthew Davis, Dylan, you the best. Absolutely, Matthew. Take care, brother. All right, so we're going to go ahead and sign off here, guys. Thank you for joining. Thank you for the support, as always, everyone. And then we'll be active in the Telegram, and I'll give you guys updates as I see fit throughout the week. So with that, have a great rest of your week, everyone. Be safe, good luck, and good trading. Tough day.